Welcome back to Daytime Ottawa. As you know, Wednesday is International Women's Day, and we'll have a special show for that. But leading up to that, we thought this would be a great topic, and the topic is investing and why it is so important to women specifically. There's a new CIBC study. We're going to get some of those results and some great advice from our next guest. I'm joined by Robyn Thompson, money expert. Welcome, Robyn. Great to have you here. And I guess that's a great starting point is tell us a little about this CIBC study and some of the results from it.
Well, Derek, there's so many interesting statistics when you're looking at women and money and financial empowerment. And as you mentioned, on Wednesday, we have International Women's Day. So when we take a look at investing, specifically when it comes to the female market, we're really starting to see females step up and take control over their finances. And it's really important to look at that. First of all, we'll see women actually control $2 trillion worth of wealth, and they're going to increasingly control the wallet share in households. So as that happens, women need to be able to gain the tools to be able to invest efficiently and over the long term in the markets, because women live longer than men historically.
Right.
So we need to make sure that we're planning for a longer period of time so we can not outlive our money.
So what other challenges are out there when it comes to investing for women specifically, Robyn?
Well, when it comes to investing, I think that women have these psychological barriers that they kind of put in place around, whether they will be good at investing, or there could be some cultural or generational stigmas around who should be the person who invest money in the household, who's the breadwinner. And when we look at statistics, we have to remember that, being a good investor isn't necessarily all about the math. And sometimes math anxiety comes up as a barrier, or just lack of education and knowledge. But there's so much support out there and so much education around financial literacy that those barriers are starting to come down. And women are starting to sort of take hold when it comes to educating themselves. And as investors, they actually, in down markets, outperform men by 1.3% and trade 23% less. So they're coming a long way.
And my understanding, Robyn, you say that women are often more risk adverse, but you say that that's not a bad thing. Why is that?
With the word risk, I actually look at it and say, what is a person's loss tolerance? Because risk seems like a really big open world. But when you look at loss and how much loss are you willing to take, that's really what risk is. And women take a very measured, thought out approach around how they invest in the markets. So they're very clear about how much loss they're willing to take, what types of returns they're looking for in their portfolio, what kind of investments suit their profile and suit their own need as both as an individual and for the family. So, understanding that is crucial in developing a plan that you can stick to over a long period of time. And women do that very well.
Yeah, maybe we'll expand a little bit more on that plan. So, say someone's watching right now and they want to get into investing. I mean, I'll be honest, I'm intimidated by it, especially when you hear the word, stock market. And, we see the ups and downs, and it's like a roller coaster ride, and it can tend to scare a lot of people. What's sort of a good starting point when it comes to investing, Robyn?
When you think about the markets, you hear it every day. It's minute by minute, hour by hour. And the media and the news cycle is just as loud if it's a winning day as it is a losing day.
Yeah.
So it does have that fear or that anxiety that can cause in people around how they get started in the markets. So when you think about it, first thing to understand is that when you look at your money and you look at what your money is meant to do for you, it needs to be keeping up with at least the rate of inflation, or you're going to erode your purchasing power. And it doesn't give you the ability to be able to save for the future. Again, we have to save for retirement, save for those big things in our lives.
Right.
So understanding that investing is part of being financially healthy and also emotionally healthy, because you're more at peace when you start to see the money in the bank start to tick up. So the first thing to start is just really take a look at, where's my money? And some people have no idea. They'll have accounts everywhere. They'll have stock here, a stock there. They'll have some company plans. First place to start is pull it all in, look at all your statements and understand, okay, where am I starting from? And then start down the road of, how much risk am I willing to take and what does that look like? And remember, there are certified financial planners, investment advisors, financial advisors. We are all out here to help you That's why we are here. And I think some people get lost in that and think, oh, I need to be a millionaire to be able to see an advisor or planner.
Right.
And that's just not the case. So if you're feeling stuck, ask for some help.
So over the last 3 years, we've also seen a lot of losses, Robyn, and I think, people are, there's a sense of anxiety around that, right? When you get at the end of the year, I mean, we're in tax season right now, you get your statement and you see these losses. What is your advice to keep people sort of calm when it comes to, because, these are unprecedented times we've just gone to. How do we remain calm and make sure and keep in mind that this is, most investments are for long term, right?
That's the key, exactly, Derek. It's about understanding that markets are about, or investing is a long-term play for the most part. You need to understand what you're investing for. So if you're looking to perhaps purchase a home, and that's in the very near future, the stock market may not be the best place for you.
Right.
But for longer-term assets, investing in the markets and allowing your investments to grow year over year over year, compounding rates of return is what's going to generate wealth for you. It's easy to panic when you see your statements. And last year, the markets across the board, real estate markets, stock markets, bond markets, all fell. Interest rates high and inflation's high. So there's no question people feel nervous. But my best piece of advice is simply not to panic. And it's really to step back and take a look at it and say, okay, so when do I need access to this money? Is it 10 years, 20 years for retirement? Because markets will always fall and then they'll always correct. So there's always that balance of up and down. So markets overall tend to go up and to the right. So you just need to make sure that you're focusing on the long term.
Robyn, very quickly, I got 30 seconds left here. What resource do you recommend people go to just to, educate themselves a little bit more on investing?
There's so many great ones out there. One of the places I would go be FP Canada. So that's Financial Planning Canada. Essentially, they're for financial planners, but they have a lot of really great resources. Ontario Securities Commission has a really great website, some amazing calculators to be able to look and see how much do I need to save for investing or how much do I need to save for retirement. There's so many great places.
Robyn,
so
really
just Google financial support and help.
Appreciate the time. Thanks so much. We'll be right back after this.